Something big happened yesterday. How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world. And today we are talking about the cryptocurrency crash that just happened yesterday. So this affected currencies like Bitcoin, Litecoin, Ethereum, and Ripple, and a bunch of other altcoins. So let's just hop right in. We're going to talk about what happened, why it happened, and what you can expect for the future of Bitcoin and other cryptocurrencies. And if you guys stick around till the end, I'm going to be providing you with a bonus of the only 3 ways that you can lose money in cryptocurrencies, broken down very simply, the 3 ways you can lose and what you need to be doing to avoiding these 3. So first off, what happened? Yesterday, there was a cryptocurrency crash at about 9:30 a.m. is when it reached the bottom of the bottom. So let's just start by defining a crash. So a crash in any market is when there is a sudden and significant loss of value in that market. So with the stock market, this can happen if stock prices are falling very quickly. And we saw it happen yesterday with cryptocurrencies. So let's look at the numbers. Bitcoin was down 28% yesterday. Ethereum was down 30%, Litecoin was down 33%, and Ripple was down 46%. And all of these drops happened within 12 hours. So from 9:30 p.m. Tuesday night to 9:30 a.m. Wednesday morning is when all of this value was lost. And with Bitcoin, I should just say that the value dropped below $10,000, which is less than half. It almost reached $20,000 around Christmas time. So in less than a month, Bitcoin fell to half its value. So this is a very, very volatile investment. So you got to be aware of that from the get-go if you're thinking about investing in cryptocurrencies and Bitcoin, because they are very volatile and they can lose half their value in a month. So the last time that there was a similar crash was on the 22nd of December, just under a month ago. That was deemed sort of the Christmas crash, and it sort of happened because there was a sell-off of people trying to get their money out, trying to buy Christmas presents, and the holidays is a big time for spending, especially in the United States. And since the United States is a very, very big cryptocurrency market, that holiday had a really big effect on cryptocurrencies like Bitcoin, and it drove prices way, way down. So again, you saw upwards of 25%, upwards of 30% drops in that Christmas crash on the 22nd. And in this crash, $340 billion, billion with a B, was lost in value in cryptocurrencies. All right, so that's the what. That's what happened. Now let's talk about why. So one of the potential contributing factors to this is regulation. So there were some potential talks of regulation yesterday in South Korea, China, and Russia. So South Korea is actually the 3rd largest player in the cryptocurrency market. China is also up there, and Russia is not quite as high, but they're also a big player in cryptos. So these talks of regulation may have scared people into thinking that some of these bigger markets would no longer be buying cryptos in the volume that they had been, and fearing that that would cause the value of cryptos to decrease significantly. So with that decreased demand, you sort of increased the fear, and people were thinking, oh my gosh, if South Korea, if they can't buy cryptos there anymore, if China can't be a player in this market, what is that going to mean for prices? And I need to sell now before something big happens. Second reason could be the availability of futures contracts. So futures contracts are a derivative investment that allows speculation on the future price of Bitcoin, and that is basically how big name investors are able to get in on Bitcoin without having to expose themselves to the risk of actually buying Bitcoin and the risks that we're going to be talking about at the end of the video. So to avoid those risks, futures contracts are now a thing. It's a derivative investment that allows you to speculate on the price of Bitcoin in the future. So that could be a contributing factor as well. And with that, price manipulation. So if you buy a futures contract saying that the price of Bitcoin is going to go down, and you own a lot of Bitcoin, there's potential for you to sell off a bunch of that Bitcoin, causing the price to go down and your futures contract to be worth more. So that is potential as well. There could be some price manipulation going on there with those futures contracts. Lastly, the third reason could be the hype cycle. So with cryptocurrency so far, we have seen huge hype cycles. So people get really excited about cryptos, they buy in, and the price just shoots up. It goes up like 100% a day. Now with the cycle, there's going to be ups, there's going to be downs. So people are going to get scared and they're going to start selling. And when they start selling, the price is going to go down. That's going to cause other people to get scared, and just this cycle of fear starts and the price just drops. And this cycle really parallels the cycles in the stock market, the cycles of fear and greed. So with the greed, the price is going up and people think it's going to keep going up forever. And then it starts to go down, people get scared, and then that fear just multiplies and multiplies. So that was why this is happening. Now let's talk about what is coming in the future of Bitcoin and other cryptocurrencies. More of the same. That is exactly what's coming in the future for Bitcoin and other cryptocurrencies. There are going to be these price swings for a very long time. And you should not expect stability in Bitcoin or other cryptocurrencies this year, or potentially even next year. Going into 2020 is when you might be able to start expecting some kind of consistency, some kind of stability in cryptocurrencies. And this is because Bitcoin and other cryptocurrencies are relatively young compared to other asset classes. And when an asset class is getting established, there is that huge hype cycle of people trying to get in while it's still young, trying to make a quick buck while something is taking off. So you're going to have these ups and downs for a very long time, relatively compared to how long Bitcoin has been around. So it's normal for a growth cycle. There's going to be buy-ins, there's going to be sell-offs. Sell-offs are going to drive the prices lower. Buy-ins and more hype there is going to drive prices up. So that's just part of the market. So that's something that you're going to have to expect regardless. And Bitcoin is really not going to stable out, I don't think. And I don't think it's going to be a valuable way to do business, at least until 2020, because it's still so young and there's still so much hype surrounding this currency, and there's still so many people trying to buy it as a quick quick scheme that don't understand what they're actually doing. Additionally, I should mention that the Chinese New Year is coming up on February 16th, and as with Christmas, since China is a big player in the cryptocurrency market, I think you can definitely expect some kind of correction here and some kind of drop in the price of cryptos around the Chinese New Year, because there are going to be a lot of people selling out and spending a lot of money in this time. So definitely expect some more volatility there, because that is a big event that's going to be happening. So lastly, nobody knows whether this is the beginning of the end for Bitcoin and other cryptos, and if their prices are going to keep going down for a while. But as of right now, prices have stabilized. They've risen most of the way back up from where they dropped to yesterday. So it looks to be a little bit more stable today, but we'll just have to wait and see that out. I'll definitely be keeping you guys updated with future news here if that's something they're interested in, so definitely stick around for that. And definitely be doing your homework before you make an investment. Don't just hop into cryptocurrencies because you think it's the next big thing. If you don't understand it, don't invest in it. And I have a little test that I use. If you can't understand something, and if you can't give like a 2-sentence elevator pitch on it to some random person, then don't invest in it. If you don't understand it well enough to give just a little 2-sentence like, this is what I'm investing in and why, then I think you need to do more research and really figure out why you're investing in that thing, and if it's something that you really are knowledgeable about. So that bonus I promised, the 3 ways that you can lose money in cryptos. The first way you can lose money is when you sell. You only lose money when you sell. You don't lose money when you buy. When you sell at a loss is when you lose money. So if you buy high and sell low, you're going to lose money. This is why you need to buy low, you need to sell high. Everybody tells you that in the stock market, but nobody does it. Nobody listens to that advice because they buy when the hype is up and everybody's buying, and then they sell when everybody's selling because they're scared and they end up losing money. So what you need to do is you need to be buying when other people are scared and be being worried when other people are all hopping into this thing and all driving the price sky high. Second way you can lose money is if the crypto market dies off as regulations kick in. So with these talks of regulations in some Asian countries, we are seeing the first sort of attempt to regulate Bitcoin and other cryptocurrencies. So that could definitely be a factor that causes prices to just drop dramatically, and is another way that you could be losing money in an investment in cryptos. Lastly is hacks. So there have been lots of hacks with cryptos. Millions and millions of dollars have been lost. So that is the third way that you could lose money in cryptos, is if you get hacked, if the company you use with your digital wallet gets hacked. That is a big way that you could lose all of your investment. And so with these three things, what I notice is two of them are almost completely out of your control. So if you buy high and sell low, that is within your control. You need to be a diligent investor with when you get in, when you get out, and be smart with investing. That is on you. Number two and number three, if the crypto market goes under due to regulation, that is completely out of my control, out of your control. And then with hacks are mostly out of your control, but if you did get a ledger for your crypto so that you could store it securely and have it on a hard drive that only you had, that is a way to mitigate risk. However, there is still that risk of a hack. So seeing that 2 out of the 3 ways that you can lose money in Bitcoin are completely out of your control, that makes me very skeptical of an investment in Bitcoin, because I like to have an investment that is completely in my control, so that I control when I buy, when I sell, and how I either gain or lose money. With Bitcoin, given that so much of it is out of your control and is up to governments and hackers potentially, I don't think that is something that I would want to invest in, because I'm not comfortable with that much of it being completely out of my hands. So that wraps up this video, guys. Be sure to let me know in the comments below what you think of this crypto crash. Does it make you want to get into Bitcoin? Does it make you want to stay out of Bitcoin? Are you glad you're in? Are you glad you're out? Let me know in the comments below, and I will be very interested to hear what your guys' thoughts are on cryptos. Also, we've got our giveaway going on right now. It is going on until Tuesday, so be sure to hop over to that video, which I will link up to, and definitely check that out. Get your entries in, and I'm giving away some cool stuff, some Amazon gift cards, so definitely head over there and check that out. And until next time.